Oh man, today is going to be a doozy. Happy Bloody Friday to everyone out there, aka Friday the 13th, Jason Voorhees karate chopping, knife stabbing option. Yeah, it feels like Jason Voorhees is pretty much chopping the market in half right now. Very, very bloody, very extremely scared market right now going into next week. I'm going to be talking about so many things in today's episode, not to mention I did buy some stock. I opened a new position that I want to go over publicly as well too. Welcome if you are new. I put out videos on this YouTube channel Monday through Friday. Saturday, I do a lot of educational content, kind of like bonus material, all entirely free to watch. Although today's episode is going to be pretty much educational along with what is going on in this market to pretty much have a very karate chopping Friday. So it's going to be a doozy. Grab some coffee, grab some water. It's 11:30 a.m. Eastern Standard Time. I've already had my coffee and I'm already revved up. So let's go ahead and firstly say that I am a stock market bull. If you're new to the stock market, some terminology that you should definitely learn is what a bull means and what a bear means. A bull basically pretty much means that you are overall optimistic. A bear means that you are pessimistic. Now, you can be long-term bullish, short-term bearish. You could also be very long-term bearish, short-term bearish. You could also just be bearish in general, right? There are other YouTubers out there that are just straight bears. They don't like to buy individual companies. On the other side, I own individual companies because I believe that owning individual companies will make you life-changing money, which it has for me. And you just have to really do your own due diligence. That's what it comes down to. Now, you're never going to be 100% right. Neither am I. I'm not God. I can't predict the future. Neither can no one else. But as long as you are right more than you're wrong, and as long as you are picking the big winners in life, like I have publicly in the last 8 months on this YouTube channel. So if you are very much looking for content around very much tech-driven, I'm a semi-bull, I'm a fintech bull, I'm a raging SoFi bull, many other stocks that I own. I am doing a public profile account challenge, taking a couple 5 figs to 6 figs in the course of 17 months, which has started 2 January of this year. So I'm going to be going over my public profile in today's episode, going over pretty much what stock that I just reopened a position in because I ended up selling the stock several months ago for a decent amount of profit. And it's pretty funny because right now I rebought into a stock that I ended up started to buying very much higher. And that notion should always put a smile on your face, especially if you are extremely bullish about a company. But overall for me, I've been in the stock market for 6+ years now, and I'm just an American bull. I'm an American patriot. I love my country. I'm also a veteran, USMC veteran. And I believe America, despite short-term pain and short-term pessimistic viewpoints, America is going to flourish and America is going to continue to go higher in the sense of the U.S. stock market, our GDP, etc., etc. So I am a overall perma bull around America. Now, earlier this year, when it came to the U.S. stock market, I was actually short-term bearish. Now, I've very much moved into the short-term kind of like neutral, semi-bullish mentality. In my opinion, this summer is really going to be a coin toss because we very well could come out of this downward slump that we are in right now, which I'm going to be talking about pretty much why we're in this slump. But it really is it's a coin toss. It's 50-50. If we rally throughout this summer, cool. If we sell off throughout the summer, my positions are built and I'm going to be buying a lot more stock with a smile on my face because history has a thing to tell the future. And next year, tomorrow, stay tuned, because tomorrow's episode, I'm going to be going over that the year before a presidential election, next year is 1 year before a U.S. presidential election, the odds of that year being extremely bullish to the upside, it would shock you, okay? Utterly shock you. So stay tuned for tomorrow's episode. It's going to be a good one. A lot of educational content. Okay, so for today, what is going on today? Why are tech stocks selling off like crazy? Look at AMD. Go back and watch my videos on my channel maybe 2-3 days ago. AMD was over $500. Go back 2 weeks ago, AMD was friggin' at all-time highs near $600. Oh boy. Oh. Hold on. I told you, we don't really edit so much around here. I keep things real. I just swallowed a friggin' burp. I don't know how the hell, how that even was possible, but go back to AMD. Back in March and April, AMD was below $200 and I was buying shares left and right, okay? And I received a bunch of comments on this YouTube channel saying, why are you buying AMD? Well, it's because I'm a teleporter and I teleport to the future, and so can you, as long as you do your due diligence. And when you are a teleporter, you can very much foresee what is going to be happening to AMD on the upside. And AMD is a lot higher right now than it was a couple months ago at $200 a share. Let me just say that. If you bought AMD at $200 a share, you're up over 100%. Now, obviously, AMD is getting kicked in the teeth. Same thing with software, same thing with everything. So what is going on today's bloody Friday? Middle East. Firstly and foremost, Middle East. The U.S. military, Iran, they're exchanging strikes back and forth. Let's go ahead and keep good prayers and faith that all this stuff gets wrapped up very soon. So, firstly and foremost, you got stuff in the Middle East popping off like crazy. You got basically just like, hey, we thought we had a peace deal, but at the same time, now it looks like we do not have a peace deal, like, at all. What is going on? It just like, are we at peace? Are we not at peace? Like, everyone is just really confused, okay? Utterly confused. What is the next thing on the list of why this market is pretty much getting sent down? Well, yesterday, we got some economical data, okay? The data that we got yesterday, it was actually very bullish in the sense that our economy is strong. Now, I've been talking about the Federal Reserve more than I really need to, because the Federal Reserve should not be in the spotlight of the market. However, because of the forces that be, the Federal Reserve has very much just been in the spotlight for so long. So, if you are new to the stock market, right now, the Federal Reserve is like the highlight. Oh, what is the Fed doing? What is the Fed doing? That is wrong, okay? The Federal Reserve should be the last thing people should be looking at. Do you know what people should be looking at? Hey, what is the profitability on that company? What is the profitability on this company? What is their CAGR, C-A-G-R, compound annual growth rate? Oh, that company's growing year over year by 30%? That company's only growing by 10%? Sign me up. Yeah, 30% year over year growth. Yeah, you're a hyperscaler, man. Yeah. Ooh, that company said that next year they're going to be dropping some super duper chips. Yeah, I want to start buying your company. You know, you're going to be dropping some new super duper chips next year, AMD. Yeah. Come on. Yeah. Talking about AMD last year, AMD's been announcing for a while that they're going to be dropping some super duper chips. The Federal Reserve needs to go away. Not in the sense of like abolish the Fed. That would be really nice. It really would be, you know, goodbye income tax. But I mean, that would just be the end of a lot of things. And there's a lot of opinions on that, but I am a firm believer taxation is theft. I'm not big money. I'm not Wall Street. I'm retail, baby. So, yeah, taxation is very much theft. But the Federal Reserve is too much in the spotlight. 12 days away. And right now, the Federal Reserve, well, the odds that they don't cut rates are pretty much zero. However, the odds that they're going to raise rates is basically like lower than ever. So why is this market selling off? What is going on? A lot of things, believe it or not. Oopsies, just clicked on the wrong button to pretty much remove myself here. If you're listening to my videos, definitely drop a comment down below. I appreciate the small amount of people that actually show up for these videos, because the stock market, it's not a popular place to be right now. And that should be a screaming buy like you can never imagine. I tell my story very often for motivational reasons, not to be very arrogant, because I want to really motivate people and have people understand how I got into this. 2020, I saw a life-changing alteration pretty much happening all throughout. Recently turned 38 years old and been in this market since March of 2020. When I say been in the market, I mean I've stayed in this market. I haven't left the market. I've stayed in the market, okay? Yes, I've gone on vacation. I went on vacation like 2 weeks ago. I didn't really pay attention to the market so much, but I didn't pull out my friggin' money from the market, okay? My money has stayed in the market for the last almost 6.5 years, okay? During my 20s, I worked tremendously hard, worked my bum off, just kept all my money pretty much in my savings and checkings accounts. Never really invested my money, and honestly, I lost a lot of money from not investing and also to inflation. That's how it is, okay? You keep money in a savings, you're gonna miss out on all these great opportunities in the stock market that is essentially just a click of a button away. Very much click of a button. March 2020, funneled in tens and tens of thousands of dollars. By my birthday in June of 2020, I had a little bit over 6 figures in the market. I didn't really know what the hell I was doing. All I did was buy the Rona stocks, which were beaten down. I bought all the airlines, bought the cruise lines, bought cosmetic companies, some energy companies. Once the vaccines were announced, boom, baby. Little over 6 figs to multiple 6 figs. Same exact thing after 2021. I didn't know what the hell I was doing in 2021 too. Neither did a lot of people. You just basically bought anything and stocks went up. 2022, that was a gut check. January of 2022, it was my reality check. I chose to stay in the market. I could have very well taken all of my money and I could have left. That's it. Why did I choose to stay in the market? Because I found a new passion in life. 2022, I learned fundamental analysis, how to value companies, how to pretty much learn about how they're going to be growing. I pretty much discovered how to go to a company's website, how to read a balance sheet, the way that investors read balance sheets, understanding the difference between margins, understanding cost of goods, understanding EBITDA, understanding top-line revenue growth, understanding every single thing, okay? Understanding the difference between a value company and also a value trap, which I actually very much got out of. PayPal, recently sold PayPal 2 days ago. PayPal was very much seen as a value trap, understanding growth companies, understanding dividend companies, and I also learned a lot when it came to technical analysis, what you see on the screen behind me, how to look at a chart, how to read moving averages, how to understand when a company is overbought, they're trading very much too rich, and also when a company is oversold, they're undervalued, okay? 2022, I made great money, not as much as 2020, 21. 23 was an ass kicker for me because I got a little greedy, not gonna lie. Ended up really messing around and trying to scale my profile too quick. 24, snapped back to reality. That's when I really just returned to growth investing. Started buying SoFi in February of 2021. So great that I did. Many other companies as well too. made great money last year because I bought Liberation Day when people pretty much wanted nothing to do with Liberation Day. And this year I'm going to end on a banger as well too. So, you gotta go ahead and stay in the market during the scary times. And right now, there's a lot of scariness going on. So what is happening today in the market? So firstly and foremost, if you're unsure, you can always use AI. I use Gemini. I highly recommend using some form of AI, whether it's ChatGPT, whether it's Gemini, Grok, Claude. Understand the way to use AI is to gather information, okay? I'm not using AI to literally, like, invest for me, okay? There are hedge funds out there, believe it or not, people on Wall Street that actually do that because they don't know what they're doing. But for me, I use AI as a tool. And I also fact check AI by literally looking just around at other areas of if this is accurate or not. So the AI reality check, massive tech and chip sell-off. Very true. AMD is definitely getting kicked. We have the semi index very much going down. So yes, that is very true. TSMC, massive profits growth, announced plans to spend an extra $100 billion building fabricated plants. US dropped over 7%, dragging down the other giants like Nvidia, Micron, Broadcom. Excuse me. Oh man, I got the burpees. So there's a lot of fears. Now, Netflix, I'm going to be getting to Netflix momentarily, but hold that notion, okay? So, firstly and foremost, chip scares are there. Secondly, escalation war in Middle East and oil going up. Oil was below $70, now it's up over 80. That's a lot of scare, okay? But oil is still not above $85. 85 bucks. The Federal Reserve has stated that oil is below $85. Fact check me if you don't believe me. The Federal Reserve has stated that as long as oil is below 85 bucks, then it's not going to show on their radar that much, which means the Federal Reserve is going to say, okay, inflation might be a little higher than where we want it, but you want to know what? Oil is not above this area. Okay, we're going to ignore it for the time being. Oil is above 85 bucks. Yeah. Oil is problematic. 90, 100 bucks. Yeah, oil is problematic, okay? So, secondly, exchanges in the Middle East, obviously, that's very much the second key thing here. And lastly and foremost, Starship launch aboard. Do I feel that this one is very accurate? Yes and no. Okay, I made a video covering SpaceX. I am a SpaceX bull very much later on. SpaceX is not going to be a profitable company, I don't believe, until 2020. Am I going to own SpaceX someday? Yes, I will be buying SpaceX someday. Is it going to be tomorrow? No. But Nightmare, SpaceX is below where they IPO'd. Yeah. They got a lot lower to go. Am I going to buy SpaceX next year? No. Am I going to be buying SpaceX the year after? No. Why, Nightmare? You know, it's the stock is probably, honestly, maybe even going to be below 100 bucks. Sorry to anyone out there that bought in at the IPO at 135 or maybe anywhere between 140, 150, 60, all the way up to 200. The company is not going to be profitable in 2030. Growth investors like myself, we really don't step in until probably about maybe a year before, maybe even 6 months before, profitability is going to be scaling, okay? I bought into SoFi February of 2024. Do you think that I knew about SoFi during 2023 and 22? Of course I did. I saw what SoFi was doing. I saw what many other companies was doing, but I'm like, hey, I'm not feeling it per se to really get invested just yet. I'm going to be invested in SoFi for the next like 10 years as long as the management team stays on the same course, okay? So, SpaceX, why is it dragging down the market? Well, firstly, SpaceX is a tremendously high value of a company. You're talking SpaceX market cap is, let let's see. Hold on one second. I got to pull up the market cap. It is 1.64 trillion. So when a company like SpaceX goes down very much by like 5-10%, that drags down the broader market because it's depleting money. Not to mention when Microsoft, pretty much the giant of software companies, aka SaaS, you're going to hear that word a lot if you're new to the market. Hardware, NVIDIA, software, Microsoft, okay? NVIDIA, they build hardware. Microsoft, they build software. So right now, we are experiencing a hardware sell-off, a software sell-off. We're experiencing high risk on assets sell-off as well, a crypto downside. Everything's down, okay? Netflix, they flopped on their earnings, which I'm going to get to very soon. And Netflix is not a $1 trillion company, but Netflix, they're at $289 billion. They are a consumer-driven company. What that means is that if Netflix doesn't do well, it's an indicator that consumers are having trouble because of high inflation. Oh, that means the economy might not be as strong as a lot of these government reports are reporting. Okay, sure. Our labor department is not selling off like crazy. You know, we're not losing a ton of labor jobs, right? But the consumer is saying, hey, you know, I'm spending a lot of money at the gas pump. I don't want to be buying Netflix for $20 a month. You know, I'm noticing that I'm spending over $20 extra a month on gas. A lot of people are spending hundreds of dollars more at the pump on gas. It's a consumer-driven company, Netflix, right? Not to mention this. 80% of America makes less than $100,000 a year. So when you have gasoline prices going up, you're going to have a large majority of the population really say, hey, I'm gonna start canceling subscriptions that I don't use. I don't use Netflix that much. I'm gonna cancel your subscription. The market takes it as a negative catalyst and it gets a double, triple whammy. So we got problems with consumers spending money. We got problems with oil. We got problems in hardware, software, and it is the greatest time to be buying stock, in my opinion. I'm not a financial advisor, but I mean, this is when you buy stock when nobody wants to friggin' buy stock out there. Okay? It's a simple terminology. Now, is there anything else I want to show on the screen? I don't believe so. Let's go ahead and move now to my public profile that I'm doing for this YouTube channel. So, welcome if you are new. I'm doing a public account profile challenge. Motivation, education purposes. This account challenge started 2 January of this year. Go back a couple months ago, this account was at like 34,000. I'm looking to take this sum of money and watch my video from a couple days ago. This account was at all-time highs near, I believe, like 55, 56, 7,000. Long term, in the next 6 to 12 months, this account is going to be well over 6 figures. Well beyond over 6 figures. And the thing about it is that you got to understand when there are certain time periods where people just look at companies and they just have so much fear, that is when you got to do your due diligence and you got to say, hey, why is this fear happening? Is the company going away, or is the company just going through some weird time frame out there? Not to mention, I am a crypto bull as well too, but cryptocurrency is in a down cycle. I actually just recently bought cryptocurrency for the first time since 2021. Very excited because cryptocurrency after this year is very much going to be going higher. Very much excited. So I started this account challenge back in January, like I said. It was 18 months. Now it's 17 months because I kept depositing so much money into this friggin' account. And the stuff that I do buy publicly, I also do buy privately on my private account as well too. I have a massive SoFi position for any SoFi bulls watching. My SoFi average on my private account is $7.41. I'm holding 1,642 SoFi shares, massive position. My AMD position on my private account is massive as well too. I was buying AMD shares below $100 during Liberation Day. Still have those shares and utterly smile on my face, man. Some of my shares that I bought in the 90s, and I think I got some in the 80s, I'm up over friggin' like close to 500% on some of those shares. It's just utterly unbelievable. Utterly unbelievable. So, what stock did I buy today that I started a new position on? Well, if you saw my video from 2 days ago, you probably already know what it is that I ended up buying. So, like I said, when I buy a stock privately, or rather publicly, I do buy the stock privately as well too. Now, education purposes for today. A lot of people don't know this, but you can buy fractional shares. So the stock on the top, my private profile is on Robinhood. Robinhood is the first brokerage that I ended up opening. Webull, I ended up opening several years ago too. Webull has always kind of been like my short-term account. Then I basically turned my Webull account into very much my like second long account in a way. I was actually trying to buy fractional shares on Webull today, and I don't normally buy fractional shares, but I'm doing it to show as an example. If you're watching and you're new to the market, understand that you don't have to theoretically buy actual shares. You can buy fractional shares. Now, why is this important? Because there are people of different demographics, different age groups. I have different YouTube channels. The vast majority of people that watch me are in their 20s. And people are in different periods of life where they're in different type of monetary brackets. If you are 18 years old working a minimum wage job versus someone that is, let's say, in their 30s or even late 20s, right? So if you're 18 years old making minimum wage, you're not going to be able to invest as much as other people making more money, right? Obviously, the more money you make, hopefully you have more income than pretty much expenses. That's something that is always very important, and it is a philosophy of mine, let alone it's a philosophy of many, many other super, super wealthy, self-made people out there. You gotta be having more income than pretty much you're spending, okay? Same exact thing for publicly traded companies. So, I bought $500 on my private account to be as an example. If you are new to the stock market, I'm not being paid by Robinhood to say this, but I really feel that Robinhood is a better brokerage to actually open and use than Webull. Webull, it gave me some errors for trying to buy fractional shares. I don't really know why. What is the downside to buy fractional shares? So if you were to close your brokerage account and let's say transfer your brokerage account, your fractional shares need to be sold pretty much in order to transfer. It pretty much gets liquidated, okay? Sure, I got 7.547 shares, but here's the thing. Keep the number simple. Let's say that you are maybe 18, 19, 20, right? And you can only invest maybe, let's say, $100 per week, or maybe even you're starting out and you can only really invest $100 per month. Okay, $25 per week. That's more money than other people that don't have any money in the stock market. Do not get discouraged about what my buys are, because I know that some of you watching, obviously, your accounts are very much bigger, and some of you all, your accounts may be very much smaller. Do not get discouraged. There are millionaires that screw this up every single day, okay? Do you have a strategy? That's all it comes down to. It doesn't matter if you have a couple 3 figs, you can go from 3 to 4. Doesn't matter if you have a couple 4, you can go from 4 to 5. Doesn't matter if you have a couple 5, you can go to 5 to 6. You can go to 6 to 7, okay? I'm a six-figure trader climbing my way to seven figures. So, I mean, it's a very simple thing. Do you have a strategy? But here's the reality. If you want to buy Netflix with $25 or $100, right, you can do so. You can buy fractional shares. A lot of people don't know that. A lot of people get discouraged. Oh, man, you know, I can only invest $50 today. I can't afford to buy a Netflix share. No, that's not true. You click on the top and you buy in dollars instead of buying in shares. So if you are new to the market, look into this, okay? Because don't get scared away. Yes, Netflix might be more than what you can invest, or maybe a better example is like the S&P 500. S&P 500 is, let's say, $746, right? You want to buy the S&P 500, but you only have $100, $200 to do so. You can buy fractional shares of the S&P 500, okay? Fractional shares are very much a thing. So don't get discouraged. Hold on one second. Had to reply to a message. Very quick base message. Okay. So yes, you can very much buy fractional shares. It's something that a lot of people don't know about, and I highly encourage anyone out there to look into it, because you're going to miss out on opportunities if you just go ahead and say, well, I can't afford something. No, you invest your money, okay? Do your due diligence, invest your money, ignore the noise. And right now we're seeing SoFi very much somewhat a recovery. That's good. Okay, so why did I buy Netflix? And call me crazy. So, what is the problem with Netflix? Well, I had Gemini pretty much create a chart of their year-over-year revenue growth rate, pretty much their CAGR, and Netflix has been on a roller coaster for the last 3 years. So, obviously, you're talking about 7.8%, and then moving up as high as 16.8%, 17.6%, obviously last year, during pretty much the massive summer boom, and now we are very much scaling down. Nightmare. Netflix, they're decelerating their earnings. Why are you doing this? Well, listen to the conference call if you have not. Their conference call can be found on their website. Their conference call can be found on YouTube. Their earnings is on their website. Not to mention it's public as well too. Water cheers. Why is their growth rate decelerating? What did I just talk about for the last, like, 15, 20 minutes? Oil. Inflation. People are paying more at the pump. People are paying more for energy. The average person is saying, hey, do I use Netflix that much? Let me cancel my subscription. What happened during 2022? Same exact thing, massive inflation. Netflix sold off. Obviously, we saw inflation very much coming down throughout 2023-24. Netflix very much increasing. Last year during Liberation Day, a lot of people freaked out. A lot of people got scared. A lot of people thought the economy was going to crash and go bye-bye. During Liberation Day last year, I ended up depleting my savings, depleted my checking account. I literally went all into the market. I don't like using that terminology very often, but when the major indexes are crashing by 20%, yeah, I'm going to go all in. I bought over $100,000 of hard cash, straight into the market. Buying opportunity of a lifetime, just like Rona during 2020. Made so much money last year. Friggin' amazing. I am going to be buying Netflix probably over the next maybe 2, maybe 5 months. Once all this Middle Eastern stuff goes away, once inflation comes back down, we're going to see Netflix growth rates go back up. I'm not really too concerned how they miss a little bit on revenue. It doesn't really bother me. Oh, yes, and by the way, I did own Netflix several months ago, and I actually could not fill my position quick enough. So I ended up taking a quick little profit of, I believe it was like 25%. Actually may have even been closer to 30%. Netflix pretty much did a very solid recovery. I was actually buying Netflix in the mid to high 70s. Now I'm buying Netflix actually below $70, which is pretty awesome. Very, very awesome. And the thing about Netflix is that find me another company of what Netflix does. You can't. I mean, who is Netflix competitor? Amazon Prime? Okay. Like, sure. Amazon Prime is very much in a different category. Netflix, they're making movies, they're making TV shows. They're always coming out with some type of deal. They could always cut back on like membership prices. If they cut back maybe $1 a month on their membership prices, that could have a surge of people going on in. A lot of people from yesterday's earnings said that it's because Netflix ended up raising up their prices too high. What if they ended up slashing their prices? Bring back a lot of people. What if Netflix comes out with a new banger of a TV show, a new movie? Netflix, they're an innovator company. And to be honest, I wish that I was in the stock market like well over a decade ago. I really do. If you're new to this market, you can't go back in time. I mean, hell, I honestly wish that I bought Netflix back in 2022. I did not. Okay, I really wish I did. However, right now, Netflix is very much experiencing a annual growth rate slowdown because of external factors. External factors. External factors, not internal factors. The company itself is friggin' amazing. Okay? So, I'm going to be buying Netflix all throughout the next, like I said, pretty much, maybe even longer than 5 months, depending, how quick a recovery. But Netflix is definitely going to be in the downward cycle. And I mean, sure, can Netflix go down to maybe 60, maybe in the 50s? Sure. Am I going to be buying shares? Yeah. Netflix is a phenomenal, great company. I'll be a buyer. Send Netflix down into $50. Pretty much we're talking all the way of where we hit back in August 24. Sure, low 60s. Okay, sure, I'll be a buyer. Netflix is one of those companies that it's everywhere. I mean, smart TVs has Netflix installed. My vacation that I went on a couple weeks ago, I was watching Netflix in my friggin' hotel room. I stayed at the Hilton and also Hampton, and they both had smart TVs. I was able to sign on with my Netflix account. Like, give me a break, okay? Netflix is a great company, and I'm so happy to be a shareholder once again. Now, what type of position do I want to build on Netflix? So, here's the reality. I would be okay building a position anywhere between $2,000 to maybe $3,000 of a total cost on Netflix. Yeah, I would actually be okay if my Netflix total cost was more than Meta. And the reason being is because Meta is just spending way too much money. So I definitely have a lot of stock to be buying of Netflix, and I'm going to be taking it a little slow, even though I'm already up by friggin' 3% here. And the reason being is because this summer is still really a coin toss. It is a coin toss of if this market is going to go up or if it's going to go down. And if it's going to go down, hey, I'm going to be buying stock. I got plenty of bling bling that I can go ahead and transfer over, pretty much be buying stock with more cash. And I would definitely feel comfortable increasing Netflix to a very much $2,000 to $3,000 position size publicly on my public account. Privately, I'd be okay with taking Netflix very much into a 5-figure position size. And the reason being is because of all the reasons I pretty much just outlined. I mean, Netflix is one of those companies that it's very much just shocked a lot of people, and it is a core consumer driven company. When the consumer is doing well, they're going to be activating their Netflix accounts. When the consumer is feeling pressure from external forces, oil, energy, etc., inflation, hey, do I really use Netflix? Yeah, I really don't. Let me cancel my subscription. Oh wow, hey, I got some extra money. Yeah, let me buy Netflix. Oh wow, Netflix is making a new movie or new TV show. Yeah, let me reactivate my Netflix account. Okay? I've had my Netflix subscription since the beginning. I mean, even there have been friggin' months that I haven't even used Netflix and I've just let my subscription run. Is that the smartest thing to do? No, it's definitely not. Yeah, I fall in that category, just giving the company money. But hey, I'm gonna be making the amount of profits that I'm gonna be making from Netflix. I'll be getting all that money back, right? Okay, so in conclusion, where do I see Netflix basically pretty much going once they recover? Well, going back to all-time highs. Call me a little crazy here, right? I know it might be crazy to think about Netflix going back to all-time highs. What? No, Nightmare, like you're a loony bin. No, they're a innovating, growing company, okay? They will eventually get back to 134, 135 bucks a share. That is a 100% upside from where it is at today. Could I be wrong? Sure, I could be totally wrong. I mean, as long as you're more right than you're wrong, I ended up selling Adobe for a $2,000 loss. Several weeks ago, I sold Adobe. Was I wrong about Adobe? I was. But why was I wrong about Adobe? Because I did not foresee that their management team would be jumping ship. I didn't know their CEO was going to be stepping down. I didn't know that their CFO was going to be dropping the ball. Netflix management team, they're good dudes. Good people. Good dudes and gals. They're very much locked on. Once again, Nightmare, you were wrong about Adobe. Okay, hey, look up at AMD. How much of a return on AMD do I have? Oh yeah, 139, 40%. Okay, SoFi baby, the Hood, Robin Hood, Palantir will get back there. Even Meta, I'm green. ServiceNow, I'm green. Netflix, yeah, Coinbase, I'm gonna be, and even my Ethereum. My friggin' crypto is even green. Like I said, more times right than wrong. You can't win them all. You got to know when to take the cut. Okay, so will Netflix get back to all-time highs? Yes. Where are we going after all-time highs? Very much in the future. In the next maybe 12, 18 months. Call me crazy. $1.50. And then after that, hey, 200. Am I going to be holding Netflix super long-term like SoFi? No. But I will definitely be holding Netflix for quite some time. Very much feel confident on my buy. And like I said, I'm going to be buying Netflix probably for the next several months. I'll keep you guys informed. So if you enjoyed today's super duper longer video, holy balls, smash the like button, subscribe for more. I love each and every single one of you. And I will catch you on the next one. Later.